Good morning, West Pacific Market Analytics here on Saturday, May the 10th. Wanted to come out with the West Pacific Week report here. We didn't get one out last week because we supplemented that with the month end. But the West Pacific Week, I want to focus on the SPX here. So what we're going to do is we're going to take a look at the four top sectors that make up the SPX. And we want to see what they look like technically, because that is what is going to drive the economy going forward, both on a level of GDP, but also the top four sectors. They're going to determine, obviously, market direction. Infotech, of course, is the biggest, and that's what's been driving it. And we're going to take a look at that. And that's been the beast, with this this AI bubble and the whole technology bubble going on again. Yes, we do have another, I would call it an AI bubble this time, but we've got bubbles brewing everywhere with the amount of money we keep printing. But let's not get into that. I don't want to get into those issues because we get into the blah, blah, blah. And I just don't like today where everybody's speaking about what is the cause. That doesn't matter. What matters is we look at the technical data, and the technical data is going to tell us where price is going. And really, to me, you can tune out all the rest because it's not important. Now, I think we're going to start out with a few models I put up on the Discord site for my members this morning to kind of look at the technical picture as we finished off the week. We've got above a 61.8% retrace, so it looks pretty much like we're finished here, and I want to show you why that is shown in the data. Now, if you want to get a hold of me again, the Discord membership, or if you want to get a hold of me to talk on a podcast, and I'm also driving forward with adding some clients. I'm looking for either a consulting role with clients out there who are interested in my type of data modeling, or even if you're looking at somebody full-time on your team, I'm open to offers of talking to anyone, and especially in the area of family offices and that sort of thing, to come on full-time with your team. So keep that in mind as you're looking at my data models. They're very unique. We're doing everything that is completely outside of the box kind of thinking, and get a hold of me. Let's not waste a lot of time here. Excuse me, I got that up wrong. Let's get into the disclaimer. These charts and updates are for educational and entertainment purposes only, and always do your own research, and please, please, please choose your own path. But you can use this data, obviously, to help you make decisions. All right, let's go back. I clicked on those other two a bit too quickly. Let's get this out of the way since we're done with it. So here we go. So the S&P sector is 30, almost 31%, 30.85% here. You can see information services, financials make up 13.5%, but if we mix in real estate, it's almost 16%. So you can see technology and finance are almost 50% of the S&P. It is the backbone of the economy. And then consumer discretionary comes in at about 12%. But remember, the consumer discretionary is made up pretty much 30% of that particular index is made up of Tesla and Amazon. They're 30% of consumer discretionary. Yes, they've weighted these index for sure to try and keep this market afloat. And then healthcare comes in at about 10%. We'll look at maybe communication service and some of these other areas another time, but you can see, we've got upwards of, a large percentage here. We're looking at what, 30%? Let's say another 15 here, 45%, another 10, 55%, another 10, 65% of the weighting is just in these four sectors. So you can see it's very important that we watch those. And also what I think is important, and I've done another slide presentation, so all these slides, including all the models, will be in that slide presentation. That will be attached just above in the description of the video. So feel free to look at all these slides, including the models, that way. But just quickly, I want to point out that just these four sectors alone, if we look at that, these information tech comprises about 10%, 9.5% of the GDP. The financials are 7.8. The healthcare is up here at about 7.5, and consumer discretionary is about 10 to 12%. But so you can see also GDP-wise, these sectors are very, very key to driving the market. Now let's look at a couple signal models really quickly before we get into the bones of the report. And you can see right here that what we're looking at here is the SPX signal is all the way up top. Last time the signal was all the way up top was the high here at 4,600 back in July of 2023. And then we had another major signal here. This was a minor signal because you can see the major signal was going up on this signal. So this is a major signal, this is a major signal, and the last major signal was on this top right here at 4,800. So you can see we had a signal here at the high as well at 4,800. So this is the fourth signal we've had, and you notice signal here was a top, signal here was a top, signal here was a top, but this is a major signal. So we have got a top here on the signal. Now look at here at the pattern. This is the Three Peaks pattern model. The Three Peaks pattern model hit a head back here all the way in June of 2024. And you can see here that we've got the head on the S&P here in February or January, February of 2025. So we got the two heads completed, and we're now here on the right side of the model. And you can see the trend is busting away and the velocity is busting away. This is a major top because you can see this whole head pattern is above the dot curve, and here is the mock channel below. Notice we're trading very nicely here and even here within the bands of the velocity channel. And here we've got this very large looking head and shoulders topping formation above the V channel. I mean, this is a top for the ages. So we are going to be heading lower. And even on that other signal, you can see we've got out of the 2009 low, we've got the first signal turn right here in the past month on the monthly model. So we've got a focus signal here, and we've got a turn showing a top of the move out of the 2007 low. Let's look at the flows. Here's NDX. You notice here, back here, all this broad gray here. This is where we had very, very solid money coming into the market, supporting it. And then as we came off this top, you can see this all draining out as we were selling. And you notice even into this rally, we had a little bit of a build up here, probably most likely short covering. And you can see we've had absolutely no build in the NDX. And notice now we're starting to roll back over. We had this little bit of a blip up here into the final high, and it's all rolling over. So the SPX looks even worse. You can see here on the SPX, look at it just starting to carve below here as we finish off the week again. And notice again how strong the flows were here back at the start of the year and off of this top. Notice the erosion here. You notice the erosion ongoing here. This is not pretty. There's nothing bullish looking right now in that model, and when we take that signal into play too. And you can notice here on our tail risk model, you notice here that the tail risk model's popped out of the trend a few times here. You see it right in there. Let's zoom in on that. You notice how it's able to pop out. It popped out here, and here's another pop out. This is the S&P popping way out here into the sky as everything continues to break away below on the tail risk model. This is not pretty looking, this stair-step down look to the tail risk model there. It's not pretty. And you can see the breadth model on the SPY. You notice it just breaking away since the end of 2024. We peaked out in breadth right here in November of 2024, and the breadth in the SPY has just been collapsing aggressively. So even breadth is falling away in the SPY model. And then if we look at the options model on the S&P, here's the options model on the S&P. You notice it's just collapsing away. Same look as we saw on the tail risk model because that is option based. And again, we can see that in that, and we can see it again here in the Qs. We're all breaking out here. Notice we came off the top. We had a rally up. We came down. We rallied back up. We've got a little bit of a move up here in the trend, but that can reverse very quickly because we should be pricing down here. So it all looks ready to make a very large move lower as we go forward. Now let's go here into the report models real quick. Try to get through these, starting off with technology. And actually the first thing I wanted to do, well, let's start there. Starting off with technology. Here we go, being 31%. We can see technology in the bigger model here. You notice how velocity is all topped out now here in the blue, and you notice now that the trend's breaking below. So here's this top here. You can see the 2020 top that we didn't even get a break in the trend. We had a little break here back in 2018. You can see we had a very big break here in the trend as we had this sell-off. And even as the trend continued to break, market stayed slow here, but you notice we had velocity above, so we're able to come up. Now we're priced here above both trend and velocity in technology. That is a very ugly looking setup. And you can see now the V channel is below. We got the bear cross in. Back here, you notice we had the bear cross in as we sold off of that 2022 top, and we've got the bear cross in here on technology. So technology is looking very much set up to head lower. Let's pop in here really quick on this SPX model. I call it the 1932 trend model, and I'll show you that in just a moment. You notice we got a 61.8 retrace here. We came right up to the trend. Notice trading sideways, coming down. Notice velocity is continuing to flush out, but trends needing to play catch up. And the idea of the 1932 trend, this is the 1932 trend. You see it here in gray? 1932 trend, but we now have a triple top on the channel here. So here's your first hit, here's your second hit, here's your third hit. This is a rule of three. The rule of three on the ending 300-year cycle has completed a triple top on this high. So this is a high that we've got to take very seriously. And you notice just this parabolic blow off here to trend. You notice here we didn't hit the black line trend, but here we have hit the black line trend. So it looks to me like that is even showing that this can be complete. So let's go back in here. So that's what we're looking at right there. Now let's go in. Those are some others I want to look at. I attack. Did I have any others? No, I don't think we need to look at more than that. It's broke away. Let's break in here. Let's go with software. So if we break down the technology sector, software makes up about 35%. It's the largest sector. And we can see in the software model here, you notice we've now got a momentum top here. You see the V channel here? Right here, the dot curve, that is the top of momentum. Momentum is now rolling over. You see the trend breaking away, the velocity breaking away, and this now all needs to price back down here in the V channel coming forward here at the rest of this year. So this is looking very, very toppy now, pricing up here. This is the most aggressive looking software model that you can see that this just wants to break away. Now what's happening is we're getting held by the gate model. So we need to see this go from open to close below here so we can break. You see the break here below this blue line, and we're still just kind of capping out here. You notice in this particular model still kind of holding up here in this V channel. But software is looking like it's ready. I mean, majority of it, obviously, you would see that mostly in the Microsoft area. And here we can see the V channel very deep here. So this is setting up for a plunge move in software. We can see if this is correct, and I believe it is, this is setting up for a very fast move down in the software sector. So I'm going to watch software very closely and see how that sets up. And next, of course, the second largest section is semiconductors, which make up about 34% of the S&P technology, 30.8%. And we can see absolutely the semiconductor model just collapsing here. We can see the V channel rolling over. We can see the indicator rolling over. And, of course, prices rolling over. So this is all ready to head lower here. Semiconductor is ready to head much lower. And you can see here the semiconductor model. Here it is in red. You notice the trend just breaking away now. You notice that last time we had the trend breaking away here in the 2022 top. But notice we had a lot more velocity in semiconductor at this high. And now we have hardly any velocity. We could see a very fast move down in semiconductor as well as in the in the software sector. So we're going to have to watch that. You can see how fast we're going to have to see. We can drop into this bigger model and then rally back up, but you can see we've got the top right here in trend and velocity in semiconductor. I don't like the look of these models. I really don't. And now the third sector in the technology area is the hardware and storage, which makes up 16%. And we can see again, same idea. Here's the top out in momentum. Notice here, going all the way back into 2017, 2016, momentum rising up, rising up, rising up. And now look at how it's rolling over here. This is a rollover now in a momentum. This is a momentum top in all of these sectors. So hardware and storage after an extremely big run, bear cross all the way back here in 2023, and now this has now got to drop, and it is going to drop down below. Look how aggressive all this is looking. So the entire technology sector absolutely looks ready to roll over. Let's look at finance. You can see finance topped out right here. It cannot go any higher, and it's ready to break away. And again, the real estate sector, which we looked at in the fire report, really looks kind of ugly. Here's a couple other finance models I wanted to bring up here. You can see here the NASDAQ listed finance. Here's our momentum top right here. A momentum top going all the way back here from 2023. And you can see there's a major signal top in, and it's now rolled over. So we're going to price down here. We got to price from here down here into the V channel. The momentum top is in on the NASDAQ listed finance sectors. Here's the S&P finance sector, same thing. Momentum top right here, major top right here. You can notice that we have now coming out of here. We've rolled over, momentum top, rolled over. This is all now got a price down here. So the V channel is never wrong. This has to go from here to here, and we're seeing that in both the S&P and the technology, the S&P and the NASDAQ-based finance models. So finance is ready. Let's look at healthcare real quick. You can see healthcare is pretty bearish. It's holding up here, but notice the gate has opened for the first time. Never opened before. Notice the momentum top here in healthcare, V channel deep, gates open, ready to break down. So healthcare's got the same look, a finishing momentum top. Here we can break the healthcare sector down into the equipment and services area. You can see a deep velocity channel here. Gate still needs to close. Look how long this gate has been open, going all the way back in history. It only closed briefly in the 2020 swoon. And once this gate closes, this is all going to drop down into the velocity channel. And then the other sector is the equipment and supplies. It's got the same look. Momentum top needs to come down. Not overly aggressive right now. We're just going to see a sell-off here. This is not a total collapse, okay? But everything is showing a top out here. Consumer discretionary, momentum top, V channel below. We see it. Finance, we see it. Healthcare, and now we see it in consumer discretionary. Look at that. Very nice looking head and shoulders pattern above the V. It has to price back into the V channel. Look at here. The whole time rising up out of 2015. In the V channel, in the V channel, in the V channel, dropping out of the V channel, into the V channel, blowing out of the V channel as momentum top. This was a blow off top right here, and now it's going to fall below. It is ripe, it is ripe, it is ripe. Momentum top, major signal top, same look, consumer discretionary, ready to drop, deep, 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 deep V channel. I think with what we see coming up in the tariffs, not going to be resolved, we're going to start seeing empty shelves here by the end of the month into early June, and there's going to be a panic in the consumer discretionary. This could be a fast move down. That's what I'm seeing here. This could just be a collapse-like move in maybe some of these consumer-based models. Amazon is probably going to take a huge hit. So that is what I'm seeing. I just don't see any much pretty here. I wanted to show you the overall look to the S&P sector. We go through that, flash through it real quick. That's what's important as we're seeing across the early models I showed you that I posted this morning in our chat board over on the Discord platform. We've got tops all the way across the board there. We've got V channels and momentum tops showing in everywhere that makes up the S&P. Do not be a fool. I've noticed, I saw a model that the retail sector is getting long this. This is a major mistake. Major mistake. So tune in. Going to have a lot more data coming at you. Again, if you want to join the Discord site, get a hold of me at destinatedtrading@gmail.com, or if you want to get a hold of me for anything at all, including consulting work, we'd be happy to take a look at your portfolio. We'd be happy to give an analysis of how you're positioned, and would very much be interested in joining your team. I put up a few models on Twitter. Gold is topped. I think gold is now heading lower. It really looks like a wave 3 top. We're going to have a pullback, pretty good size pullback over the next few years to complete a wave 4. And then we're going to have the blast off move out into the future that's going to take gold out to massive big highs. But first we have a big pullback. You know, this is a long road. You know, you can't trade gold thinking short term. You got to be thinking over decades. Years and decades when you're looking at gold. The pullback will take time, a few years, and then once we get that pullback and we get this major move down in the market, they're going to open up the printing board, open up the printing spigot, and I think in the ending 300-year cycle going out to 2076, we're going to get a hyperbolic, absolutely hyperinflationary blow-off. But that's a long way out yet. I mean, we're probably talking new highs in the market somewhere after 2040. And that blow off would be taking us out into the 2040s, 2050s, and 2060s. So for many of you, you're not going to be around to have to experience that. That will be a story more so for our children. Thanks for tuning in. Glenn out.